Alright, got the tweet out. See how long it takes people to get their butts in here. What's up, guys? Hope everybody's enjoying their weekend. What's up, Raul? We have what I'd like to think is a really good prep this weekend today. So, we, as always, give it a little bit of time, let some people kind of come in. I don't want to jump the gun here and have people missing some important stuff. What's up, Alex? Dude, I saw Top Gun last night. Oh my God. We got to see an early premiere at the Marine Corps Air Station at Miramar, and it was absolutely the coolest thing I've done in the longest time. They rolled out an F-18 to put out in front of the movie theater. They had a volleyball tournament, a costume contest. Like, it was, dude, it was over the top and amazing. And the movie was really good too. So I'm not going to ruin the movie, obviously, for you guys. But I grew up watching Top Gun. My dad built fighter jets. He was Air Force. You know, and I would always get to go to work with him for Bring Your Kids to Work Day and sit in like fighter jets. And now I get to do that with my kids. And so it's like this really cool way of showing my kids something that played a big part of my childhood, and now it's playing a big part of theirs. It's really awesome. Yeah, so it was really an awesome event last night. Top Gun, when it comes out in the normal theaters, I will go see it again. It's an awesome movie, and whenever there's a movie that you know really loved as a child and they decide to do like a second, like a not a remake but a continuation of it, you know, you have this little thought in the back of your head, like, I hope they don't mess this up, right? Like, they better not mess this up. And they didn't let me down, man. This was an amazing movie. How's the volume for you guys? Can you hear me okay? Let me know. It looks like it's good on my OBS. And hopefully I don't look too distracted. If you see me looking up, I have the PGA Championship on my top monitor. If you ever wonder why traders need so many screens, it's because one of them's got to be dedicated for whatever the big sporting event is. Perfect. Thanks, Calvin. Thanks, MS. Just another minute here, guys. We'll kick this off. Dun, dun, dun. Oh, man. Tiger it's always fun to watch play, but you know, he's still pretty fresh off that injury, and you could tell he was kind of feeling sore as the tournament kind of dragged on. So it's unfortunate, but I mean, big props to him on even trying to come back and play so soon. I love watching Tiger play. Yeah, Calvin, we always start at 5 p.m. market time, 2 p.m. my time, and it's pretty consistent. I missed once a few weeks ago when I was in Jamaica, and then I had to do a recorded version of it a few weeks before that when I was in Florida, and the Wi-Fi wasn't really helping. But yeah, for the most part, every Sunday, 5 p.m. market time, so which is right now. So we'll get this started. Hey guys, Ricky here. This is what is it? The 22nd. This is May 22nd. This is the Sunday prep. So real quick, if you guys aren't already, please subscribe and turn on the notifications to the YouTube channel. And more importantly than that, please leave comments, not just in the live chat right now, but if you're watching this and it's like after the live stream or whatever, leave comments and let us know like things you'd like to see more of, more things maybe that you don't like. We're always willing to, you know, listen to the criticism out there in order to try to make a better product for you guys. That's what this is. This content that we produce is for you guys. And so we don't know what to do to make it better unless you guys are vocal about it. So please drop comments in the recorded, like the posted version to the YouTube channel. If you guys are looking for a broker, Cobra Trading is hands down my favorite broker. Best customer service in the biz. Really good locate fees, really low commissions, and you'll get even lower commissions. If you use the link in the description below, you'll get 25% off your commissions, which adds up a lot. And you also get a month free of your favorite platform, whether that's DOS or Sterling, or I believe they have their own platform as well. Spike Heat, these guys create a product that I highly recommend. If you guys like to do back testing, if you like to see if there's legitimate edge in your strategy, you need a product like this to save you time and energy. I used to do a lot of data tracking manually. These guys made it so that you don't have to do it manually, guys. Check them out. Scripts to trade. These, whoops, well, let's just talk about earnings. Earnings, guys, got a lot of great earnings this week. You see Nvidia up there. Costco, I know Costco's probably a big one this week since we saw retail get smoked last week because of Target and Walmart. So yeah, lots of good names this week. There's going to be a lot of action, a lot of big trades. Again, we don't go over the earnings trades during the Sunday prep, but there's a webinar I did specifically on how I prepare for earnings. If you're interested in checking that out, it's on the True Trader YouTube channel. I'm sure High Trader's probably getting ready any second to drop a link in the live chat. So yeah, check that out if you haven't already, guys, and you want to learn how I personally get ready for any type of earnings play. And then, of course, Scripts to Trade. These guys create amazing indicators or tools for Thinkorswim and TradingView. And I think they're also starting to code some for possibly NinjaTrader and maybe another platform out there. Wouldn't surprise me. These guys are geniuses. They're very, very knowledgeable in coding, but they're also traders, so they know what it is that people are looking for. They got scripts out there for volume forecasting, abnormal volume, VWAP Boulevard, which is a free one. If you guys haven't checked these guys out, do so. This is a business, and you need the right tools to conduct your business, guys. Like, invest in yourselves. And like I said, these guys ain't paying me. I'll scream these guys' name for free till the day I retire. They've created so much value for the trading community. It's the least I can do. All right, so that's all the housekeeping. Let's get into the topic today. You should be able to tell by the title of the YouTube how to trade a bear market, right? Well, it shouldn't be a surprise by now because we are months and months into this downtrend on the broader market. The S&P, the Dow, the Nasdaq, everything's in a downtrend. So whether you want to call it a bear market or not, that's fine. That's just semantics. I don't really care what you want to call it, but you have to know how to trade it. And so there's a few things that I think need to be explicitly put out there so people can, try to stay safe. That's really, when I create content, I'm always doing so with this forethought of how to keep traders safe. So what are my tactics that I use to personally trade these types of markets? Because I do trade them, right? And so you have to understand, everybody should be able to pinpoint what it is that they do. Like I said earlier, this is a business, right? So what's your business model? Are you a day trader? Are you a swing trader? Are you an investor? Are you primarily long bias? Are you primarily short bias? You need to know the answers to these questions because they matter. They matter, they matter, they matter. Okay? So, yes, I trade, but I also have long-term investments I manage as well. And guess what? When we go into a bear market like we're in right now, I don't trade those things the same way. So, the first thing I wrote down is, if you can only go long, then you need to make sure that you're looking for sectors where they still have an uptrend intact and you see money rotating into those sectors. I.e. right now, the two that come to mind, guys, that everybody should know is energy and oil, right? So if you can only go long, you might want to be looking to put your money to work in those sectors because the trend is still your friend. You don't want to be fighting the path of least resistance, right? The other way to go long is to look for situations where things get oversold. Now, that can be very subjective, and not everybody will have the same definition of what oversold really means. But for, for this instance here where we're doing the Sunday prep, I can only speak from my personal experience and the way I trade, right? These are my opinions, okay? So for me personally, for something to be looked at as oversold and where I may be willing to go long something because we may get a bounce play in the near term, I need to see extension, meaningful extension away from the daily 20 SMA. That's how I do it. It's not a secret. I'm not trying to keep it a secret. I mean, most people will tell you I'm an open book, guys. I'm not out here trying to keep secrets from anybody. I'm actually trying to be as transparent as possible and help you guys. So if I see something that gets extremely extended away from the 20 SMA on the daily time frame, that to me means that it's moving into a level. We did a whole webinar on balance and imbalance. So a stock, even if we're in a bear market and things are going down, they're going to find levels of imbalance and need to resolute back to levels of balance. And so those do actually provide long opportunities. And as you've seen since this bear market started, we've had some face ripping rallies, which by now I'm sure you've heard this term probably overused, and that's the bear market face ripping rally, right? You hear it all day on Twitter, people talk about it, so it shouldn't be a surprise. And you can see it on the chart when you look at the daily chart of the, whether you use SPY or the ES or the QQQs or the NQ. We've had some big rallies, but those came from levels of being oversold. Those came from when we moved into areas of imbalance, extreme imbalance, and needed to have a resolution back towards the mean, back towards the trend, because things don't just go straight down. They have to move lower via lower highs and lower lows. And keep that in mind too, because that basic concept of stocks needing to move via a trend, that transcends every time frame and every era of the stock market, whether you're talking way back in the Great Depression all the way up through the dot-com era, the great financial crisis, and even into today, right? Stocks don't just go straight down. They have to do it via lower highs and lower lows, and they don't just go straight up. They have to do it via higher highs and higher lows. And that means there is going to be plays on both sides. So what's another thing I do when we go into these bear markets? Well, a lot of people I work with and talk to, they kind of got their start during COVID, right? 2020, maybe 2021. Well, and even if, you can make an argument that even if you started well before then, we've been in a 13-year bull market. You literally could buy the dip for the last decade or longer. And if you were wrong on your timing, the market was in a situation where you would get bailed out. So whether you just added to losers or whatever, typically got bailed out and reinforced a lot of bad behavior. Well, guess what? That market is gone. You really, really need to zone in on risk management, understanding when to take your shots, understanding that this is the time to have extreme discipline. You cannot do the whole hope and pray type thing in this market, because you're not guaranteed the market's going to bring your stock back up to your level or your entries, and you could actually get demolished. I mean, it's happened time and time again. It's not the same market we were in 8 months ago where you could just keep buying the dip. Now, remember the bull market. It was classic to see these guys for 13 years trying to call a top on a bull market, and they just got ran over. I was able to short stocks in that bull market, but I had to be very disciplined. I couldn't just short and add. I had to stick to my stops. I had to stick to my risk. And now it's the exact same thing, but on the other side. If you're trying to get long, you got to pick your spots, and you got to be very, very disciplined on your risk management. You must stop out when you're wrong, guys. This isn't about trying to be right all the time. It's about just trying to be right until the market tells you you're wrong, and then acknowledging it and moving on. And that's just part of what we do for a living. All right. So the fourth thing I wanted to touch on is go ahead and learn to short. Now, I know the first things we were talking about there were just if you're just a long only trader, but But there's nothing wrong with learning new tricks. How do you learn to short? Well, for people that have like conditioned their mind to only see long trades, give this a shot. Invert your charts. Whether you're on Thinkorswim or TradingView or TC2000 or whatever you use for charting, I guarantee you there's a button or a way you can manipulate the chart to flip it upside down. And it would probably blow your mind if you've never done this to do so in this market. And the second you do and you start looking at chart after chart, as long as you're not looking at the oil or energy charts, you can look at chart after chart after chart and you'll be like, damn, these look like some very bullish setups. What's that mean? Well, you're saying it looks extremely bullish, but the chart's upside down. So what you're really saying is these charts look great if we were going short. And it's no different at all. And again, it's not for everybody, but if you feel like you need to be involved in the markets and you can't stand to sit off to the sidelines and be patient, then there's nothing wrong with trying to learn how to short. It's not evil, I promise you. You're not going to burn in hell if you short stocks. It's just an idea, guys. But again, same concepts apply as everything else is risk management, right? Stay disciplined. And the last thing is, if you really just feel like you can't learn to short, you only can go long, and you are more of a long-term trader, then sit on the sidelines. Cash is a position, sit on your hands, be patient, and wait for the next bull market to return. There's no telling how long that'll be. It drives me nuts that we're 5 to 6 months into a bear market, and all I hear people saying is, hey, Ricky, where do you see this bottoming? Where do you think the bottom is? The answer is, I don't know, and I don't care. I don't have to know. Same way I didn't need to know where the top of the bull market was, because just like we talked about minutes ago, right? The only way for the stock market to go higher is to make higher highs and higher lows. It's not doing that, so we ain't got no end in sight. As long as we're making lower highs and lower lows, we're going lower. Now, does that end today? Does that end next month? Does that end next year? I don't know. But the chart is going to tell you. And one of the hardest things to do in trading is knowing the difference between when to hit buttons and when to be patient and sit on your hands. So again, that really does kind of go full circle back to the first thing I was saying, and that is being able to identify what kind of trader you are, what kind of market participant you are. Not everybody is a day trader. Not everybody's an investor. But don't look at what other people are doing and feel like you need to be doing that. Because guess what? There's people making a killing in this market. There's also people that are getting killed in this market. But you can't look at somebody that's crushing this market and feel like you need to do what that person's doing, because that person might not trade the same type of markets as you, might not have the same strategy, doesn't have the same business plan. So make sure you know what it is that you do. What are your core strengths? What are your core weaknesses? How do your strengths play into the current market, or maybe they don't, right? You have to identify these things, because until this bear market ends, the path of least resistance is going to be down. And if you're a long only trader, you got to recognize that. So that's my tips to you guys on how to try to stay safe during this, and possibly even profit off it, right? So, again, here in a second, I'm going to start doing the actual ideas for the week, and I'm going to have a lot of ways I'm going to try to extract money from the market this week. But that's because I know how I trade, I know where my edge is, and I know what kind of market we're in, and I'm not, the worst thing you could do right now is be stubborn and not willing to admit that the downtrend is the path of least resistance. All right, so let's do the disclaimer real quick, and then we'll get into the prep. Guys, neither I, True Trader, or any of its representatives are registered as security broker dealers. I'm not an investment advisor. I'm not licensed. Everything I talk about is my own opinion, and it's not a solicitation to buy or sell any stocks. Everything I talk about, guys, is for entertainment purposes only. All right, so here's our ES chart. We're going to go over the broader market first, as always, guys. If you're new to this, we have a format. I'll talk about the broader market, then we're going to move into sector analysis, and then we'll get into the ideas, longs and shorts. All right. So not a lot has changed since last week. We got the rally that we were kind of talking about, and it should come as no surprise where the rally went to. It went pretty much right up to the 20-day, and then we're right back to new lows. Now, The chart that actually interests me is the weekly, because, you know, we start getting too caught up on a daily chart, or even worse, intraday charts, and we start to lose focus at just how far off we are from certain levels. I think the weekly chart here does a great job of showing you just how extended we are actually getting from the weekly 20. The weekly 20 is the white line on this chart, guys, in case you don't understand. So look at what happened the last two times we got about this. Actually, we're more extended now from the weekly than we were on this one, where we pushed back into it, and this one, where we pushed back into it. So we could obviously go lower, and that's, you know, you'll often hear me say the could versus should. Could we go lower? Of course we can. Should we go lower? I don't think we can say that confidently the further we get away from the weekly 20. So yes, of course we can come down here. You know, I have some levels marked. You see these alerts? The orange dotted lines are my alerts for this coming week, right? So down here around this 3,700 level, and then 37 or 3650. Those are the two levels, you know, that are lower, where I will be looking to see if we break last week's lows, if we come down to those areas. But I actually think when you start to see this many, show me another time where we've gotten this many weekly red candles, right? Like, we can go back into other bear markets. Like, even here, right? Even this was a really, really long one. It didn't matter, because look at the distance we extended down before finding some support and trying to push back up. Yes, we came lower, but we pushed back up. You guys got to understand that it's not just going to go straight down. So I don't know if we rally this week or not, but I am preparing myself. You know, you'll hear me say that a lot as well. Like, we need to make plans, contingency plans for every different scenario. So I definitely want to be prepared for if we have a big rally this week. And so you'll see that when we get into the individual ideas. So let's go back to the daily chart. I mean, the monthly really, you know, we can look at it because we haven't started a new month yet, so it's not going to look a lot different than last week's prep. But again, you know, not only are we pretty extended on the weekly time frame, we've actually overshot through the monthly 20 by quite a bit. Now, it's not like unheard of. You can see back in 2020 and in late 2018, early 2019, we came right through that monthly 20 as well, down into the monthly 50. But the further we get south, the more likely to get that big old rally back is going to be. And I want to make sure I'm prepared for that. I don't want, it's not just about like staying safe and making sure like I don't get hurt because I'm short. I want to be able to prepare myself to capitalize on that, to make money on some of these longs that are setting up if the market does rally. So that's really the point. That's the point of kind of acknowledging this. And I also want to point out too is we see this happen a lot where we just come and break lows by a little bit and then snap back up. So like, you know, we didn't close below those lows. We didn't close below 2 weeks ago's lows. We just kind of probed lower and then popped back up. So I really do think there's a good chance of a nice rally this week. Again, if we were to rally into some serious levels and do so emotionally, there's a lot of resistance up here as well, where I will be willing to take shorts on names that are set up for that. But I want to be prepared for every scenario. So obvious, you know, the 20 day is going to be the first level of real resistance. I have a few that are marked from last week based on intraday. Let's take a look at, let's just change this to an hourly. All right, yeah, so you can see right here in this, you know, 39.70 area, and then up here around 40.30. And I would almost consider this just a range, right? It's going to put us kind of into this descending downtrend. The 20 days right up there. Anywhere in this area, I think we're going to find some resistance. And, you know, it's also a psychological round level, 4K, you know, kind of coincide with that 400 SPY level. But above that, you have 40.90. And then I've got a few, you know, when I start getting too many alerts in here like this, I think some of these are probably leftover from the previous week. You know, I would probably go through here and be willing to take a few of these out and just be focused on some of the more important levels, especially this one up here around this quarterly pivot, which is going to put us right around that 41.50 area. And then, of course, way up further, I don't think we're going to rally up here this week, but just in case, obviously the 50-day, and then that 4270, 4280 area. If we were to somehow get up there, that's going to probably act as some serious resistance, especially if we get there emotionally. But that's the S&P for me. Let's head over to the NQ, the Nasdaq, and check out what. Whoops, I did not want to do that. Hold on. Got to make sure I keep my charts set up properly. Don't want to change the time frame on the intradays to a weekly. All right, same thing, guys. We're getting a bit extended. We're getting pretty damn far away from the weekly 20. The weekly 20 is lining up really perfectly with the monthly 20 as well up there. Any kind of rips up into those levels, that's going to be like the big short area. Prior to that, you're going to have this 13.5. And, you know, I would actually probably be very interested in this 13K level as well, with it being the round psychological level. Let's go ahead and look into the daily chart here. Support, I'm going to actually be looking versus last week's lows as like my first level of support. I don't have an alert there. I'll just throw one right now. Whoops. I don't know why I was doing that. Hold on. In case you guys don't understand how I set my levels or my alerts, I like to do them just so they're good for 1 week, right? So I have them expire on the Saturday so that, you know, next Saturday when I'm doing my Sunday prep type stuff, these alerts will have expired and they won't still be sitting here. Yeah, so I will play against last week's lows. If we get underneath there, I'm willing to step aside and let this thing see where it wants to come. You can see back here we had some levels that were pretty interesting. We'll call it 10.7 and probably 10.9 yet. But again, we'll see if we can get under last week's lows before those come into play. I have the same thought on Nasdaq as I do with the S&P, and that is just that I do think that there's probably a rally around the corner that's going to catch some shorts off guard. I want to make sure I have my shopping list ready for names I'm willing to get long if I see that turn. And so we'll get into those when we get into the individual ideas. Bitcoin, actually really, really impressed with what it's been doing, and we talked about this last week, and that was the fact that the only thing the bulls had left to say was that 28K level never got a close below it, right? Why is that important? Well, it was a big level to snap, but we couldn't hold under it. And since it snapped it, you can see this consolidation just above it. So it really is trying to hold that level very nicely. You know, it would probably need to clear 31.5 to get going, but it's gonna have some issues because it's gonna run right into the 20-day at that point. If it gets through there, the same levels as last week are what I'm looking for, that 37,000 area. It's going to be like right into that 50-day. That was the important level that it lost. It sent it down here. And if it were to come back under 28K and hold under it, you know, there's quite the air pocket under there. No telling how much lower it would want to go. Everybody would probably be trying to convince their aunts, uncles, moms, dads, grandmas, grandpas to buy the dip if it ever came back to 20K. The problem with that is when everyone's trying to buy the dip because it's such a no-brainer, it just gets crowded, and I don't want to be, you know, I'd like to see price action confirmed before I step in there. It's no different like than the equities, right? You guys hear me say this all the time about the equities. If we're looking at something because it's oversold and we're looking for a reversion, you don't have to find the bottom. We're not trying to catch a knife. We're trying to wait for something to risk against so that we can have defined risk, because that's the only way that you're able to protect yourself. The only other thing I can picture you doing is trying to scale in and keep your position size small enough that you're not going to get hurt. But we all know how that goes, right? You're just adding, and before you know it, you have way more size than you anticipated, and you've been wrong the whole time. And there's nothing worse than that, guys. All right, so that's the general market, the broader market. So we're going to hop over into the sector analysis. We're going to go over to thebarchart.com, stock market sector matrix. Few things stand out. The consumer discretionary got smoked. Why was that? Well, that was because of Target and Walmart last week, right? Healthcare held on. We'll see that when we look at the ETF. And energy is still strong, obviously, but utilities also held on. And the other thing that, I'm sorry, I did not mean to say Walmart and Target smoked the consumer discretionary. Consumer staples got smoked because of that. I misspoke there. And you can see it's like probably the biggest down week that sector's had in a very long time. Consumer discretionary still getting smoked, but that one is more so obvious, right? Because first thing that people stop buying is materialistic stuff they don't actually need when we start to look like we may head into some form of a recession, right? Got quantitative tightening on the horizon. Interest rates keep going up. And, the economy is kind of in a precarious spot. So consumer discretionary is the first thing that typically goes out the door with that stuff. So let's head over to the ETFs and we'll check them out real quick. I don't want to spend too much time on them. Retail obviously got smoked. Target and Walmart had a big part in that. They are pretty oversold down here. I could definitely see these things getting a bounce. Financials, they're kind of just hanging on. Again, another one of those ones where we broke last week's lows but didn't close below them. In fact, literally just got a little flush below and we're right back above. So be very interested to see if this does want to kind of magnetize back up towards the 20-day. Real estate, again, the only reason I follow this is because I am interested in the real estate market and I'm trying to see how well this correlates with what we're seeing in the actual market. But the first thing to notice just from a technical standpoint is the fact that when we bounced in the underside of that monthly 20, which you can see was also a key level from back here, rejected, and we came back lower. Now, pretty bullish candle on Friday. We'll see if they suck it back up. But again, I don't trade too often in this sector. There's not a lot of individual equity names that have the range and the liquidity to make these desirable for me. Healthcare, again, this is the one we said, held tight and it's still holding these key levels. So if I was looking for stocks that might have some sort of a long setup, I kind of like this look. If we were to push back above, what is this up here? 131, let's call it 131.40. That's definitely going to be interesting to see if that triggers. You've got your low, the push back up into the 20-day, higher low, and if we break that, we should get a bit of a move up. So that's what I'm looking for on that sector. Building and industrials, I don't typically trade. Still look like crap. If I'm just trying to quickly give you like what I'm seeing, industrials much more so, right? The material sector is it is still holding on. It's still trying to hold some levels. You can see it's holding this monthly 20. And it's just this key level right here. Kind of reminds me of what the financial sector kind of looked like it was doing. If you look at here, where it, really was trying to hold this channel and then finally fell apart. You finally got that crack, the push up to make the lower high, and then it rolled over. So I'm wondering if maybe that's what we're going to get here, is just trying to hold these levels, might get the crack, and then put in a lower high and start to roll over as well. True bear markets typically do take down all the sectors, right? Even with energy and oil so strong right now, if we go into a recession, some of those things might come in quite a bit as well. Typically nothing sacred in a bear market. So utilities, really like how this is holding. I really do. You got this inside week last week. You see I have an alert set up here. If we clear this, go over this 72.75 area, I think we're going to get a push. And I do have one name from this sector in my long list this week, so you'll see that. And it's just an important thing for you guys to understand about why I look at sectors and try to analyze what sectors have strength, what sectors are weak. Well, if I'm trying to create long ideas, I want them to be in sectors where I think money's flowing into, where they have some strength still, which was that goes back to the intro, right, where we're talking about how to trade bear markets. I don't want to be getting long on sectors that are just extremely weak, unless they get oversold and get an extension away from the 20-day. So I like that inside weekly candle there. I just think we clear that level. I think this is going to get a push. So here's your consumer staples. Guys, keep in mind, this sell-off is pretty much because of Target and Walmart. And you have Costco this week too. So I think what happens with this sector may hinge on what happens with Costco. If I recall, Costco's later in the week though, right? Probably Thursday, maybe even Friday morning. I don't really want to go pull up that image again right now, but I'm pretty sure it was later in the week. So there may be that looming uncertainty in this sector. And you guys have seen situations where we have this kind of stalemate. It's similar to the way a market will go into a chop as we approach like the Fed minutes. Nobody kind of wants to make a move first until we start to hear the Fed minutes come out, and then then all hell breaks loose. But it is interesting to see if we reclaim some levels, because this sector was super strong. It was one of the very few remaining sectors that had a good looking bullish chart, right? Like prior to losing these levels, this uptrend was intact. So I'm very, very interested to see, do we reclaim some levels, or do we push back up into these levels where we came from and find some serious resistance? Because it's going to take a little bit of time to heal this broken chart that they've just demolished with last week's price action. Consumer discretionary still getting killed, coming into levels again. Down here at this 132.90 level, I expect that to act like some pretty good support if we flush down lower. And that's the type of stuff, if we come down here, look at that extension from the 20-day. There may be some bounce plays in that sector. Communications, we may be putting in a higher low here. Again, it would need to clear, let's call it 60. It would need to clear 60 to have a shot at reversing. We do have quite the extension from the weekly 20. No surprise there. Communications has been very weak this whole bear market. In fact, we discussed that a lot, right? This is the sector that kind of started the bear market well ahead of every other sector. Biotechs, I should probably make a Martin Shkreli joke right here. I feel like he's out of prison. Maybe he's going to start buying up some of these really cheap, based on a book valuation, biotech stocks, right? There's a lot of stocks trading below cash. He's a very smart guy, regardless of what you personally think of him. And so he gets out of prison after being in prison for a few years. I wonder what he's thinking as he looks around the biotech arena. We'll see, because it doesn't really matter, honestly. Like that, I mean, that's just me being silly. All that matters is the chart. If we find a bottom, if this starts to make higher lows and then starts to make higher highs, again, I've been saying this every single week, there should be a shopping list of names that are trading under cash, where when this market decides to finally bottom and finally start making higher lows and higher highs, there should be plenty of opportunities. Technology, obviously very similar to what I always say about the Nasdaq. Again, did not close below the previous week's lows, just flush below. I think we may have a rally. We'll see. I have short ideas and long ideas from this sector, so I'll be ready for any scenario. And then your energy and your oil, obviously, bull trend still intact. Higher lows, higher highs. I mean, you can't really, I don't understand how people can fight this and say that they think this is a big short. There's, when the time comes, when this finally rolls over, makes a lower high and then a lower low, then we can have that conversation. But for right now, be objective, follow the trend. It's higher lows, higher highs. Don't fight it. Buy dips or short really big, significant extensions. That's the only way to play these strong sectors. And again, you'll see, I feel like kind of getting a bit of a flag up here on oil as well. And obviously CL, the crude futures, is not a ETF, but I definitely check this chart out plenty. And you've got higher lows here, kind of building a little bit of a roof. I think this thing breaks through, and this, you could see another push in crude as well. So that's the overview on the sectors. Let's head right into the individual ideas. So we're going to start with the long setups. The first setups I look for are strong stocks where I'm looking for continuation. So the first name is AEP, and it's exactly from last week's prep, guys. This is the same idea, the same name, and the exact same thing I said last week, and that's it needs to break over this 101. What did I write down? 101.60ish. Let's just call it 101.60. You can see I have that alert set there. If it can break above that, then the game plan is buy dips on the retest of this trend line, right? So any break over 101.70, 101.80, looking to buy a dip back into like 101, 100, play against that psychological level, because I think this thing can get a big move up. The next name on this list is APA. So I'm looking two different ways on this one. A flush to 38, which is a pretty significant level. How far back I got to go for it, but let me look at a weekly real quick. Yeah, the weekly 20 is going to be right in that 38 area. What I like about, if we get the scoop on 38, what I like about this is if it flushes down here to 38 and we don't break below this 36, just call it 36, and then this turns, then you're getting a higher low on the weekly chart as well. And then the break up above this 43.50 area is much more significant. But if we don't get the flush down to 38, I will look for this thing to break above this 43. I got to see what I wrote down. 43.50? Yeah. So I need to break over 43.50, and then I'm looking to rebuy the dip and join trend on this. No, like exactly the same as AEP, right? Same thing. Break out of the flag and then a retest so I can get long. But yeah, I like this APA chart. It's in an energy sector, so again, we're focusing on long opportunities in sectors where the money's rotating into, or it still has a bullish, intact, long-term trend going. It should be no surprise, like most of these charts that are in this section of the prep are trading less than 10% below their 52-week highs. That tells you a lot about the strength of something. We're in a bear market, and these things are still up at their highs. All right. Next name, and this is the one I told you about. I have a utilities name on watch. It's Duke, and I can already tell you right now, Simon in the chat is probably going, Ricky, I thought you said you don't like trading Duke. I like this setup. All right. So with Duke here, either scoops off 107.50. You can see we have a lot of lows down there. You see all these wicks, right? Every time the stock flushes down to these levels, they're buying it back up. And so I want to be a buyer down there into 107.50 or the break of 111. And then I'd like to join trend on a retest of about 110. That's where I would look to get it. So over 111, where did 111 come from? It's this high right here. Can even draw a circle for you. So break over this high. In fact, let's go ahead and set the alert as well so I don't freaking miss this. Again, I don't know where this copy price thing came from. So I need at least 11 cents over that whole dollar to really tell me that it broke above 111 with any sort of conviction. I want to know at least by next Saturday what it can expire. And I'll just say long trigger, buy dips. Okay? That's how we do it. And I actually, you know what? I need to have this alert down here too. I'm going to put it, let's see, right there. Sorry, usually I have all my alerts set. And in fact, for the rest of the prep, if there's no alert there, I'll just do it later on my own time so I don't waste your guys'. So 107.50 scoop on an emotional flush off the open on Monday, or a break over 111, and I'm looking to buy a dip back into like 110. Looking to buy dips and join trend, meaning, you know, I want to see higher lows. That way I have defined risk. You know, I don't want to just buy a retest into 110 and not know where I'm risking against. All right, and then the last name in this sector is PFE. It's Pfizer. I'm looking for a retest of, you see these, I'll just draw this line for you guys so you can see these recent highs here on the daily. Just a retest of that. There's the monthly pivot. So 50.80s, 50.84 is the monthly pivot. Anywhere in that level, early flush off the open on Monday. I'm looking to scoop this name. It's been strong, been right off this, you know, holding this trend very, very well. And now it's starting to curl and push up. I just want to get long on the dip, thinking this thing's going to push possibly up into this 56 area. I don't think it's going to be a one-day banger. I think this is going to be like a scoop. If it closes strong and I have cushion, I can leave a piece on for the swing. That's how I would treat this. So that's it for strong stocks looking for continuation. The next section is I'm looking at oversold stocks where I'm looking for a reversion. And this is like I was saying, if you have to go long in a bear market, you better have some significant extensions downwards away from the 20-day so that we feel like, you know, we're going to get a reversion back to levels of balance. So it should come as no surprise. The first name on this list is Walmart. Absolutely smoked. You know that there's going to be big money sniffing around, trying to figure out when they can come in and get involved on this, even if it's just for a near-term trade. You know, I don't know if funds are trying to come in here and initiate long-term long positions on Walmart or not. It's not for me to know and not for me to care about, but there will be big money interested in this. It's a very, very significant move down, especially for them. So there's two different things I'm thinking here. Either playing against Friday's lows, last week's lows, with defined risk, but I am not writing off the fact that this could come down to 110s. You guys see this level here? I can just draw this straight across so you can, no, hold on one second. I gotta zoom in to get, there we go. You can see where that level came from, right guys? So a retest of that would be the next level. If we don't hold last week's lows, I'm looking for 110s. The lower, the better on these kinds of things, guys. Again, it's very, very important for me to point this out, is that I'm not trying to catch a falling knife. I want to see something to risk against. We already have, if you look at Friday, so you can, here's what I'm looking at. This 118.58 was the quarterly pivot. Look at what happened on Thursday and Friday. Thursday, test, test. Friday, test, test, test. Broke below, test below, resistance, resistance. We got back above it. This 118.58 level is key. If that firms up, if I see this thing push 120, 119.50 and flush back to this 118.50 level and they start to buy it off that, I'm probably going to get long off that level. That's been a key level, and you know, you can just treat it as an over-under. If it can't hold, you can just kick it, or you can size your position so that you're risking against Friday's lows. If it loses Friday's lows, again, I'm looking for the 110. If you don't want to trade Walmart and you'd be more comfortable trading Target, you just trade in that 118.50 level for 156. Same thing happened, except it was on Wednesday, where you got the test, below it, test, got below it, underside of it, resistance, 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 resistance. We clear back above 156, I'm going to look for it to firm up. So both Target and Walmart have the same pretty much daily chart. Got smoked on their earnings, way off that 20-day. You got to think there's probably a lot of meat on this bone. I want to be there for some of it at least. Last name on this section is KHC, Kraft Heinz. So this got brought down because the sector was weak because of Walmart and Target, right? So you know, but the thing is, and make sure you guys understand, this long trade idea that you're seeing here was an old idea that was caused by this setup right here, right? If you guys are in true trade, you probably know about this setup, the pullback, intermediate high, higher low, the trigger, and it went to the target. But I leave these things on my chart so I can go back and see them at later times. So therefore, that's why it's still on my chart. I'm not trying to illustrate that trade, or that's not part of the idea. But when you start to look at it on the weekly chart, where has this pullback gone to? It went right back to the trigger area from that long setup. That was a swing long. Now we just retested that breakout level where the trigger happened. So I'm very, very interested in this name. And typically you won't find me putting a name with a $1.27 ATR on my list, because I need range for intraday trades. There's not a lot of range on this name, but what's the possibility here, guys? If we put this on, risking Friday's lows, or maybe we buy it off a test of the 200 or the annual. There's so many things in this level, right? 200-day annual pivot, monthly 20, retested the breakout level. Lots of stuff in here, right? So if I'm going to try to play this against Friday's lows, my thought process is that if this closes strong and I have cushion, this is very much so lending itself to a possible swing trade. So if I get a position on come Monday and this thing starts to move up, I'll lock in my profits, have some cushion, and have a piece left over that's sized for a swing trade for a push back up into some higher levels like that 42 area. So that's the idea on Kraft Heinz. All right, so now we're going to get into the short ideas. The first short setup I'm looking at is Dash. So I'm looking at a spike in the 74. You got the 20-day right up there, and it was also this recent daily level, right? So, and obviously we tested up there, couldn't close above it, stuffed it the next day, and now we're going to possibly go and retest it. So caveat with these short ideas, guys, is make sure that the market is behaving correctly for you to try to be putting a short on. Because if we get that bear market rally that we were discussing during the broader market part, you got to pay attention and know that that's happening, or else you might put this on here and it just rips in your face and you could get absolutely smoked. So it's one of those situations where, will I take a shot there? Yeah, but I'm going to be very, very disciplined on my risk management and where I stop out. I'm not going to let something get out of hand, especially when I spent all weekend trying to solidify it in my mind that you got to be cautious on the short side this week. Okay, so I do like the 74 level. We'll see if we get a spike up there. I might, you know, not might. I definitely will stop out if I'm wrong, and I might take another shot up at the quarterly pivot of 76.84. You see 2 recent highs up in there, and that would be quite the move off the open Monday if it can rip that high. Next idea in this section is Oracle, and I'm looking for 72. So spike up to the quarterly pivot puts us in the recent daily levels as well as the 20-day. This thing's just been a steady downtrend. I think a spike back up into 72 gives us a good short. All right, that is actually it for the weak stocks looking for continuation. Not because there's not more of them. There is dozens and dozens of them. I just don't think it's necessarily to come up with a million ideas that all look the same, especially when I feel like I need to be safe on the short side. I am looking at one overbought reversion setup, and that's MRK. Merk, and it's not there yet, right? I need to see 96, 97 blow off for this to possibly be a fade. But you see, we are getting quite the extension from the 20 days. So if we can rip higher, I'll be interested. If not, it's probably a no trade. Now, I have a section titled Special Situations this week, and the reason is the broader market possible rally that I was talking about. So there's names that are set up specifically for if that market rally comes. These things look like they're perfectly set up, but they don't fit nicely into any of those other categories we just went over. So keep in mind, these are names where I'm trying to get long if the market's going to have that rally. So the first name on this list is probably going to make people spit their coffee up. Coin. Yes, Coin's a piece of junk. I've been short biased this whole way down. And in fact, it does have a looming short trigger under the low of this candle here, which is 60.50. Okay, so under 60.50, and this should head lower. But if we look at a weekly chart, if we break last week's lows, which is 60.50, and we can't come down here and make a new low, we may be getting a higher low on the weekly chart. And then the break back over last week's highs is a major trigger if that happens. So, you know, if we can actually lose 60.50, I'm not actually that interested in shorting it. Typically, when I think my alert even says it, yeah, it does. Look, short pops. It says daily, short trigger on the daily, short pops. Trust me, I'm not that interested in shorting pops on coin if we break last week's lows. Because if we break last week's lows and this thing starts to hold and we put in a higher low, over last week's highs is dangerous. It's very dangerous. And what I'm looking for, it doesn't even have to, you know, we don't even have to lose last week's lows. If we break Wednesday's highs, that is an anticipation trigger to try to break over 74.50. So if we break over 71.81, I'm looking to get long on dips and join trend, because I think, you know, if we get over that 71.81 level, we are going to test that 74.50 area. And that's a nice gain in itself, right? Taking a few points while it moves to the next level is a great trade. But if we get above that level, this thing could get moving, and it could be a magnet for the 20-day. So I really, really, really want to make sure I don't take my eyes off this if this thing moves. And keep in mind, as much as everybody thinks coin follows Bitcoin, if you've been watching coin for the last while, it's really starting to follow the broader market more so than it is the cryptocurrencies. So it really is following Nasdaq and the SPY much better than Bitcoin. Just keep that in mind. All right, so the next name in this list of names I'm thinking might get a ripper if the market turns is MRNA. And again, it's over Thursday's highs is the trigger. And it's no different, guys, if you look at the weekly chart. If we break last week's lows but do not take out 2 weeks ago's lows, we may be getting a higher low on the weekly time frame, which would make that break over that level even more powerful. Now, the one thing that I'll point out that makes this way less desirable than coin is that we're not that extended from the weekly 20 like we were on coin, right? Like if we go back to coin, you'll see the extension from the weekly 20s quite a bit. Moderna, on the other hand, not a lot of room back to the weekly 20. But I would love to see us just, you know, kind of trigger and then look to buy dips and try to join trend, because if you guys ever trade this name, the range it can have is really sizable. You know, we've been having it's got an $11 ATR at the moment. But like if we were back here, when we were trading in the mid 200s, you know, we're looking at a $30 ATR. Doesn't mean we're gonna have a $30 ATR trading down here in the hundreds, but if this thing catches a hair up its butt, it could be ripping, and you don't want to be fighting it short either. So maybe you don't take the long, but at the very least, guys, pay attention to these levels, because if this triggers the long, the very least you can go hands off on the short, right? Hands off on the short. All right, and the last name on my list this week, probably another one's going to make people want to like slap me, is Roku. I think Roku is setting up for the long. It's been such, it's been such a great fader, but we tried to probe below. We made this push down on Friday and it soaked back up. So basically I've got 101.55. Over 101.55 should send it. I do think that the first emotional spike up into 110s is probably a great fade. I really do. I think we get up into 110s and I'm probably looking to fade it. That's why I have this alert set up here, is just in case we do push those. But I have an alert right here to get long on dips if we trigger over 101.55. I feel like Roku's another one of those ones that, $9 ATR, liquid enough, beaten down enough. If this market really turns, watch it on, again, maybe you don't buy Roku for the long. Maybe you just pay attention that Ricky was pointing out there was a long trigger and you can keep your hands away from the short and avoid a headache, right? So do with it as you please. Those are the ideas, guys. If you have some questions, I'm going to kind of go through them in the chat. I don't know if I see any right now. Let me quickly glance. Yogi's making fun of me for my coin. Well, if there's no questions, guys, I'll give you guys a few minutes if you had anything you wanted me to look at or you had questions you want to ask. But if there are no questions, I have no problem hopping off this live stream and enjoying the rest of my weekend, like I hope you guys are. So I'll give it just a few more minutes. There's good old KH asking about the same names. So Roblox, I can talk about Roblox. Roblox has a long trigger sitting right here. In fact, Roblox actually probably could have made this list over, what is the high here? Over 36.43, and this thing should get going. The problem is, I don't like the way it rejected that 36.43 level so hard on that day where we shoved up there. So I don't know. We'll see. It would have to get above that level, and then look. It needs to start holding some of these levels, these previous days' highs on dips. Evan's asking if I'm not messing with any small caps. Not for the Sunday prep. I definitely do. The thing about it is, there's almost like no small caps that are like extreme A++ setups. And what do I mean by that? I mean like the type where you only get 3 or 4 of them a year. That is what I love, and I can be patient for those because I also trade the large caps. So, honestly, I thought I would miss small caps a lot more than I do because I have been quite a bit hands off for the last 6-7 months and just kind of patiently waiting for something that is like, just the juiciest small cap short setup that I'm going to see this year. And there just hasn't been anything. So, I can look at SIGA for you guys. Let's see. This is the kind where is this all-time highs? Yeah, we're up into all-time highs. It's obviously on Thursday, had a lot of shorts feeling really, really comfortable. It traded, 40 million shares almost on Thursday. And then it just comes in and rips face on Friday. You probably got a lot of people bent on that. If it blows into like the $20 area, maybe. But that's what I'm talking about when I say like I only want to trade the ones that are just so overdone, so A++, that it's almost like impossible to ignore it. Yeah, so like the old me, I would be all over this, right? And I would be tearing apart the filings. I would be creating a game plan. But for me, like, to justify spending the time to do that now, it's got to be so A plus plus, so crazy extended to the upside, you know, that I can't ignore it. And maybe SIGA becomes that, but until then, there's not, for me personally, there's nothing there. Let's see. I'm reading some of these questions. How do you size into your best trades in the morning? So if that's actually a good question. If I'm actually taking a mean reversion trade, like say something rips off the open into a level, and I want to put a trade on, if I'm looking for a mean reversion trade, I have one entry. I use hotkeys to enter, and it's full size, one entry. And then my target, sometimes I'll scale out. Typically, my first target is the 1 minute 20. Now, if I'm trying to join trend, it's a little bit different. You can take a starter position, and when it starts to confirm and do what you had planned, then we can start adding into our position. But definitely, I talk about this a lot. It's very important to acknowledge, are you taking a mean reversion trade or are you trying to join trend? Because the two are not the same, and they have to be treated differently. How can you do a review and not look at Tesla? Pretty easily. I mean, Tesla's just a dumpster fire. There's, you know, if anything, it's probably lending itself to a possible dip buy if we come down here to, you know, obviously 600, the round psychological level. Even better would be like this 650 to 660 area. But again, there's nothing there right now that would earn it a spot on the Sunday prep. So like the Sunday prep has to be for things that I feel like there's an imminent setup. Because I want these things, I hope that at least one or two of the names that I put on a Sunday prep every week actually set up and give you guys an actionable trade. There's like nothing I can tell you about Tesla right now, other than it would have to sell off quite a bit more before I get interested, or it would have to rip quite a bit higher before I would look to short it. That's how something like Tesla doesn't end up on my prep. There's just nothing there right now. Stock selection is really big, guys. I think a lot of traders would benefit hugely from getting better at picking what stocks to be trading. Let's see. Does Netflix look good for a small risk at 176 level? So, Yogi, the thing about Netflix, yes. So if it flushes down to 176, I think you could probably buy that with really tight risk. But what I will say is under 176, and it's a short trigger to go test lows, right? Why are my circles blue? They're supposed to be yellow. So, oops. Actually, let's put this one here. So, classic short continuation setup right here. Okay, push into the 20-day, pull back, lower high under these lows, and this should come down to here. But we actually just had this discussion in the True Trader Lounge with one of our members who was saying, you know, isn't that a short? It's a short continuation, right? Because the trend's already down. So it's really just the stock trying to hold trend. But if it comes down here and cannot get below this level, it does create a really big long trigger back over here, back over this. So that's the way I look at these. So if it, you know, I know you want to buy this with risk under 176, but the trader and me would rather see it lose 176, kind of come down here 170s or whatever, hold, because what's that going to look like on a weekly chart? It's going to look like a higher low on the weekly, giving us that long trigger and there is a substantial extension from the weekly 20 on Netflix. So that's the way I kind of look at that. But I see exactly what you're talking about, Yogi, and I highly agree. Any kind of flush down to 176 can probably be bought with, you know, a pretty asymmetric risk reward, which is always good. VWAP Trader's asking, how's the surf today? I have not been out to the beach today, and no, I have not tried that pineapple beer yet. What is this? Madridista. Do AR and BPT look like long trades? Let's look. This is energy, oil and gas. You know, there's definitely, so it looks, what do I see when I look at this? The first thing I see is it looks just like all these other energy charts, right? They look the same. So yeah, you could trade this almost the exact same way I'm kind of looking to trade some of these other ones. Got this little trend here. What I would say is you need the break above, on AR, you need over 36.82 to trigger. So it's this high right here. Over this level would be what triggers, and that should get you back to all-time, or I don't know if these are all-time highs, maybe 52-week highs. Yeah, they're not all-time highs. But that over that level should get you up to 52-week highs. I don't, on oil and gas names and energy names, the one thing I hate doing is buying the breakouts because they typically just bag everybody and then they end up working. So like above that level, and then I'm looking to buy dips on a retest of this, like this pennant. The other way to play that would be like, looks like buying dips at the 50 day has been working for the last few big dips down in the 50 day. So possibly buying, you know, 32.30s. Yeah, Yogi's saying he agrees, but he's also expecting a market bounce. And that's exactly like, that's my thoughts too, Yogis. I really think we might get this rally, which is why I put like the coin, MRNA, and Roku on there. Because I think something like those names can give like a really big long opportunity where the range on them is just amazing. Netflix has good range too, so I'm not trying to knock that idea at all. And what was the other one that Madridista was saying? BPT? Is that another oil energy? No, this is an investment trust. So the thing about this one, Madridista, I won't trade stuff like this because it just isn't liquid enough. This doesn't, you know, it's not trading even 1 million shares a day. So for me personally, I need 2 million or more a day, and even then, like that's the bare minimum. So yeah, for me on BPT, it's a no-go. All right, guys. So I'm gonna end it there. I do kind of want to watch the end of this PGA Championship, and I hope you guys learned from this. I hope you guys took away some value from the discussion. And as always, if you still have questions, don't be hesitant to at least give the 5-day trial at True Trader a go. It's $30. It's only $100 a month for the actual monthly membership. And I'd love to see you guys in there. You'll get instant access to me, but you also have my mentors in there, Adriano, Goose, a good friend of mine, Sunil, who's a absolute killer on the markets. I mean, the value is outstanding over there for what you get. Yeah, hope to see you guys over there. If not, I'll see you in the markets tomorrow morning. Everybody stay safe. Trade your